Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, a couple of stocks are slipping actually from the high point of the day, and that explains why the Nifty has revisited the sub 10,800 odd mark. Tech Mahindra as well as HCL Tech, some profit booking there. Another couple of stocks like Asian Paints as well as Axis Bank, both of them have done a bit of a U-turn in the last few minutes. So just keep an eye out on both those two stocks as well. And even ITC, I think, has taken a bit of a leg down. So keep an eye out on that one. ITC should come up for you. But moving on then, today on our special series, Hunting for Value, we'll focus on Crompton Greaves. The company's stock, in fact, has fallen by nearly around 38% in 2018. But analysts across the street, they're betting on the restructuring of loss-making units. Is this stock a value pick or is it a trap? Anisha, take it away.
Well, yes, the stock that we are talking about is CG Power, and that's because the stock is trading close to its 2-year lows right now. Now, remember, the delay in resolution of loss-making international business and the lack of transparency really had the street worried. In fact, the gash became more profound after the Q4 numbers. As you can see on the chart, it was down about 25% after the Q4 numbers. So what really accelerated this down move? First up, the sale of the loss-making Hungary business, which has been the Achilles heel for the company, got further delayed to June. Now, remember, this business adds close to 100 crore losses per quarter, and hence we saw FY19 EPS being cut by analysts anywhere between 20 to 50% post the Q4 numbers. Now, resultantly, despite the price correction, the valuation multiple still remains a tad bit elevated. Now, to add to the nervousness, the company also reported some write-offs in the quarter gone by, totaling to around 400 crores. Now, what is actually spooking the street is the timing of this recognition, and this is raising eyebrows because the auditors of the company had suddenly resigned with immediate effect in April, and the Q4 audit was signed by interim auditors. Now let's analyze what can be the potential triggers for this particular stock. Now the Sanjeevani booty for the company, or the re-rating trigger as the analysts call it, can be the sale of the loss-making Hungary business. Now remember, the initial guidance was the sale in December, that got pushed to March, and now the guidance is around June, and it's only 15 days till the end of June, and we haven't heard really any update on that. So important to point out that. Other than that, the appointment of a Big Four auditor can also act as a potential re-rating trigger for the stock. Now remember, the company had earlier mentioned that due to some conditions precedent to a fundraising plan, they had to change their auditors, but the lack of appointment of the Big Four auditor has investors a tad bit nervous. Also, the clarity on the possibility of further write-offs will go a long way to build on the trust of the investors and improve the transparency. Now, the company is also taking a debt resolution plan which will help them to bring down the interest costs, and the overall financial performance of the industrial business is expected to improve, and that can be a potential trigger. Now, 5 out of 15 brokerages actually have a buy call on the stock, while only 4 recommend selling, and 6 of them advise you to actually continue holding the stock, given the fact that their consensus price is around 75 rupee per share. That leaves you with an upside of around 20 to 25%. Motilal Oswal, for example, had cut the estimates of FY19 EPS by a whopping 46% post Q4 and has a neutral rating, while Macquarie believes that the selling in the stock is overdone and the street is completely ignoring the improving fundamentals of the standalone business. Now, let's take a quick look at how the peers are also performing. Now, a quick look at the P metric will tell you that CG Power is still not, essentially very cheap and is trading at a premium versus to the peer at 19 times the FY19 earnings. Hence, while the analysts do believe in the turnaround story, and that could be a potential trigger, the investors are a tad bit nervous about the Hungary deal, and the fears are not completely unfounded, let me be honest, because given the past instances, we have seen the deal falling through. So that is perhaps something that is spooking the investors, but the analysts, they still remain positive. However, standard disclaimer, this analysis is not a recommendation at all. It is just a collection of facts. Back to you.
Okay, thank you very much for that. As Nigel pointed out, the markets have lost some ground from the top of the day, particularly in the mid-cap space. So keep your eye on some more names, particularly a couple of these, pharmaceutical names. So Marksans Pharma's lost ground, Stride, Shasun off from the top of the day. You've got Vivimed, which is higher by close to about 9%, but just off close to about 1.5% from the top. Let's get in some technical opinion then. Ashwini Gujral and Prakash Gaba join us on the show now. Ashwini, not too much happening, quite a dull day. The Nifty is at that 10,800 mark, a bit of a negative bias. How are you approaching trade?
See, I think the early morning rally was a bit deceptive, and that has been sold into, quite strongly. So my sense is that at least the Bank Nifty is looking fairly weak, and we've just assumed short positions. Now, sometimes these things can not work out, but the sense I am getting is that the Bank Nifty was not able to cross, 26,600, which according to me is a sign of weakness. So maybe we are lucky today and we get the breakdown. But overall, a lot of stocks which were higher in the morning are now beginning to come off. Having said that, individual stocks, DHFL is a sell with a stop of 630, target of 605. Canara Bank is a sell with a stop of 277. There's a mistake here. Canara Bank is a sell with a stop of 277, target of 263, and RCF is a buy with a stop of 72, target of 84.
All right, Ashwini, on the Nifty as well as the Nifty Bank, if we could sense some weakness, then you'll be looking to short it at these levels, or will you be looking for a bit of a bounce to short it?
No, I think this is a good level to short, because if we start to expand, then 10-15 points up and down will not matter. Basically, the rally that Bank Nifty had in the morning was not strong enough, and that indicates that the selling pressure is coming lower and lower.
Okay, let's get in Prakash Gaba as well. He's here with us in the studio. Prakash, what trade on the Nifty or the Bank Nifty?
Well, Nifty in the morning we had said that there could be a possibility of, basically the bias is down, but if it goes up, maybe there was a good possibility of going up to 10,860. It never went there. So that tells me that I am weak. So Nifty is weak, and Bank Nifty was more weak, like I said this morning, and it's actually broken down. So I feel that any rallies that we may get, both the indices, those are shorting opportunities. I have two candidates here today. Bank of India certainly is looking weak and can see a slide to levels closer to 100 zone. So maybe 99 is possible. Stop above 102. That's quite tight stop. That's needed. Power Finance is another stock that looks weak. Possible target on the downside is around in the vicinity of 81 or 80 zones. Stop about 83.
Okay, all right. Thanks so much for that, Ashwini, as well as Prakash, for giving us those trading strategies. But we have the European markets that have opened up. Remember, yesterday they did fairly well. It was viewed that the ECB's tone was more dovish. So on the back of that, we saw a bit of a relief rally today. They've opened up as flat as can be. The FTSE as well as the CAC, they're absolutely flat. But we'll wait for those rates to stabilize, then we'll do a quick check again. For the time being, though, keep an eye out on the broader markets. There are a few stocks that are seeing selling. CG Power, you pull up the intraday chart out there. That stock's moved for the low point of the day. Even Adani Power is another stock that I was looking at. That as well has come in for some profit booking. Let's get up Adani Power as well up for you on the screen. But on that note, I think we'll slip into a short break. You come back, we'll continue our focus on the markets as well as on some stock-specific action. Well, we're struggling to find some green today, but TCS, that's trading mildly in the green ahead of its EGM today. The board will mull a share buyback, wherein the promoters are expected to participate as well. Reema's with us. Reema, run us through those details.
Yes, in the green today. For this week itself, it's rallied close to about 2.6%. As you rightly said, the board will be considering a buyback today. We should expect the announcement before markets close, because post-market, the management will be heading for the annual general meeting. Now, the company's paid-up equity capital plus free reserves as of FY18 is close to 85,000 crore rupees. So, with a plain board approval, the company can do a 10% buyback, which is a size of 8,500 crore. But if they seek a shareholder approval, then the buyback size gets expanded to 25% of the paid-up capital plus free reserves, which takes the buyback size to 21,300 crore rupees, which is roughly 3.1% of the outstanding equity. The promoter holding stands at close to 72%, and given the cash requirements that the group companies have, it's quite likely that Tata Sons will participate in the buyback, and they participated last year as well. The street expectation is that the buyback size will be close to about 18,000 crore thereabout, a little more than what they did last year. So last year, the company did close to about a 16,000 crore buyback, which was 2.8% of the outstanding equity. And this buyback is in line with the company's stated policy of returning about 80 to 100% of its free cash flow. And given the buyback is more tax efficient, you could see companies like TCS opting for that route along with dividends in order to meet its total capital allocation policy.
All right, so we'll keep an eye out on the total quantum that they're going to spend, and around 15% will be reserved for retail as well. In terms of retail, you're qualified under retail if you have shares worth 2 lakhs or less. Remember, the last time it was a lottery because, you know, whatever you tendered in got accepted because the acceptance ratio was very, very high. It was 100%. So just keep that in mind. For retail audience, the last time around, it was an absolutely bonanza for all those shareholders, Rima, that had sub 2 lakhs. Like I know various people of the same family, some who had 2.5 lakhs and 4 lakhs, but their acceptance ratio was less. But the ones that had 1,90,000, 1,95,000, whatever they tendered in, all of that got taken back. So just keep an eye out on that front.
And you know, it will have to be a substantial premium. Otherwise, you know, no retail shareholder is going to tender in at a time when the management is giving you very bullish commentary.
Absolutely.
Anyway, 72% is held by the management. If you want the rest of it to tender, then you know, you will need a substantial premium. Last year, it was an 18% premium, you know, to when they announced it, it was an 18% premium to where the stock was trading at.
Okay, all right. So the next few hours, we'll know what exactly is the buyback price and at least the quantum as well. But let's shift focus to the pharma space. That's been the star in the last week or so, the last 10 days. Dr. Reddy's as well as Mylan, they've got the US FDA approval for a $1 billion drug, that's Suboxone. Ekta's with us to analyze the impact. Ekta.
Well, yes, an important drug that Dr. Reddy's has received approval for. Its a market size is around $750 million currently. Now, remember that there is only one company which is selling this particular drug. This is the first generic approval and launch which will take place. Now, the interesting fact is that Dr. Reddy's is going to launch this drug at risk. That means that there is a litigation which is currently being undertaken by the innovator of the drug as well as Dr. Reddy's. Now, if in case Dr. Reddy's does lose that litigation, then there will be some amount of damages which they will have to pay. Now, nobody knows the extent of those damages, but obviously there is a fear that that could play out in terms of a risk. Now, separately, in terms of how much money they could make depends upon the competition. Right now, there are conservative estimates which range all the way from around 10 rupees on an annualized basis all the way to an initial 60 rupee bump up. So you don't know how much initially they would make because you don't know whether other companies would follow suit, such as say a Mylan and launch the drug as well, or maybe an authorized generic which would be launched by the innovator itself. So there are a couple of permutations and combinations which one has to reckon with, but nonetheless it is definitely a positive which is coming in for Dr. Reddy's. Additionally, for Olympic, the news is that they've received an EIR for their Panila facility. EIR basically means the closure of an inspection. It took place in March and they were issued 3 observations. Those 3 observations, there was fear that it could probably escalate in terms of the nature. But they received 2 approvals last week itself and one this week. So a total of two approvals. And those were expected to be from the formulation facility at Panila. So the street had probably factored in a clearance anyway.
Okay, thank you very much for that. UPL is also buzzing in trade, and this is after Deutsche Bank has reiterated a buy on the stock with a target price of 890. Sonal is here with all the details. Sonal?
Well, yes, UPL is one stock doing well in trade today, and that is because Deutsche Bank has written on the company. They say that the recent concerns related to depreciation of Brazilian real is now far behind. Remember, Brazilian real was a 13-month low versus US dollar last week. And also they say that their exchange tracker, that shows 2% YOY positive impact on revenue for UPL this quarter. They think that the backward integration that the company is getting into will improve the margins going forward, and also that the company will be able to achieve the constant currency revenue growth guidance towards the upper end. Now, the company had guided for a constant currency revenue growth of around 10 to 12%, and DB expects them to achieve a revenue growth of around 12% in coming year. Also, they are reiterating their buy and expect an 18% EPS CAGR for the company in years to come. Back to you.
Thanks so much for that, Sonal. Well, time for a break. Up next, Sanjeev Bajaj talks about the Allianz partnership. We'll get you excerpts of that conversation. Stay with us.
Welcome back. 10,800 on the Nifty, so off about 30-35 points on the Nifty. But the pressure is coming in the PSU banking space. So if you pull up the Nifty PSU Bank Index, that's lost close to about 1.5%. It was the outperformer this week, but now it's selling off quite rapidly. Even the individual constituents, so Bank of India, PNB, a Bank of Baroda, the intraday charts will show you a pretty sharp slide coming through in the last 30 minutes at the low point for most of them. But let's move on. Shireen Bhan caught up with Sanjeev Bajaj, the MD of Bajaj Finserv, from the sidelines of the EY Entrepreneur of the Year event, and began by asking him about his plans on investing in India's startup ecosystem. She also asked him about the company's plans for a future stake by Alliance in the insurance business. Here's an excerpt.
There are a number of other opportunities in the tech and the fintech space and the insurtech space that we are working on, not only in India, but across Silicon Valley, Tel Aviv, Singapore and London. And as and when we see strategic opportunities there, we will clearly evaluate an investment option also.
Can we expect anything in this financial year, anything that's close to being signed up?
No. So there's nothing that's actively on the radar in terms of an investment. There are a number of projects running right now. So there's nothing within a timeline of, say, this year. But you never know with these things. Sometimes opportunities accelerate, sometimes they don't. But there's nothing at this stage that's on the drawing board from an investment perspective.
Speaking of decisions, a decision that has been pending is on what Allianz intends to do with its stake, in the insurance ventures. Given the regulatory change that has happened now, has there been any future conversation, further conversation with them on what they intend to do, what you intend to do?
Yes, our conversation with Allianz has been very clear. They are not only very supportive of the Indian business, but they want to help it grow and go from strength to strength. So we have their full support doing this. At this stage, they are staying at 26% in our two insurance companies. And if they change their minds, they will get into a discussion with us. But we are working very closely together in continuing to build these two businesses.
Okay, so they retain 26%. They're not looking to hike that stake, which they are allowed to under the law.
They've decided that at this stage they will stay at 26. It doesn't mean that they will not want to take their stake up in the future, but where they were evaluating this over the last couple of years, they've decided, as far as we know, maybe a better answer would come if you were to check with them directly. But what they've told us is that they will stay at 26 right now, but significantly increase their support strategically to help these businesses grow. So that's a big positive for both companies.
Well, that certainly is. So you're clearly saying that they will retain 26%, and that's the discussion, and that's where things stand with Allianz. Let me then ask you, as I pointed out at the start of the show, it's been a phenomenal growth story for you, Sanjeev. Do you believe that you will be able to replicate the kind of numbers that we've seen, given the fact that this continues to be largely an underpenetrated market, with everything that's in play today? Do you believe that you will be able to replicate the kind of numbers that you've been able to deliver on, or in fact improve on them?
So again, Shireen, in each of our companies, we divide up our opportunities into multiple sub-businesses. For example, Bajaj Finance has 25 different business lines. We've been fortunate that with the way India has been growing the last 10 years, and we've had a couple of slow years, but in general, most of our business lines have grown. But for example, for the last 2 years, our mortgage grew much slower than our consumer business. But overall, the growth has been such that, as you mentioned in the beginning, we've seen a 40% CAGR growth. I don't know whether we can achieve the same growth levels going forward, but we do project a 20-25% growth rate annually over the next few years at least, the way we see the opportunity and the significant underpenetration.
Okay, all right. Let's slip into a short break on that note. We'll leave you with some market opinion from Adrian Movat. He says that one needs to look at stocks optimistically in India. Let's listen in, and we'll be back with some commodity trading strategies.
Well, it's time now, as always, to talk about commodities. Himanshu Gupta of Karvi Comtrade joins in now. Hi, Himanshu. First, let's start with the strategy that you're recommending on gold.
Hi, good afternoon. Well, we have seen a good move in precious metals after the FOMC policy meeting. We have seen eventually prices moving, making a higher high, and prices tested even $1,307 per ounce in the trade yesterday. Although we have seen some retracement in the prices, but having said, the setup is looking great, and I think this calls for a fresh long positions. So as far as the trading call for the day is concerned, I recommend to go long in August month's gold contract at 31,350 for the targets of 31,550, and a stop loss below 31,260 would be recommended. In similar lines, silver is also looking very strong, and after a very long period of consolidation, we have seen silver prices breaking above the 41,000 resistance. So in similar lines, silver is also a buy. 41,350 remains the entry level for the day. 41,900 remains the intraday target, while in the immediate short term, prices can rally towards 40,400 and 43,200 as well. And a stop loss below 41,150 can be placed for a trade and intraday basis.
All right, Himanshu, but what about crude? Everyone wants to know what's going on with crude. You're expecting a bit of a bounce from here?
Well, we have seen some upside in the prices after the STEO short-term energy outlook report from the U.S. raised the demand outlook for the rest of 2018. Also, we have seen some inventory decline in the weekly inventory data released from U.S. But having said, ahead of the OPEC meet lined up next week, we can see prices broadly trading in a range. But if, as far as the trading strategy for the day is concerned, we think that the prices are poised for some more upside in the immediate short term. And for the day, one can go long around 45.20 for the targets of 46.30, and the stop loss below 44.80 can be placed. But broadly, we expect Brent, the WTI to trade within 68.50 on the higher side and $65 on the lower side till the outcome of the OPEC meet is out.
Yes, OPEC meeting is on the 22nd and 23rd of this month. Himanshu, copper prices have eased. Just recently, we got the Chinese economic data, the industrial output, the investment, retail sales, all of them were lower than what the street was anticipating. And that has put a question mark on the demand for copper, as a result of which, it's seen a fall of 2.5% this week. How would you approach this correction in copper?
Well, absolutely right. We had seen a great breakout in copper after a very long consolidation on the back of some supply concerns seen. However, on the dismal Chinese data and the kind of the strength in the dollar, we have seen some correction in the copper prices. But talking on a technical pattern, we see this retracement as a technical retracement, and this calls for a buying on declines. The broader trend is still looking strong, and the levels close to 478, 475 remains a very strong entry levels given the risk-reward ratio. So for the trade, as far as the trading strategy is concerned, one can go long around 478 for the targets of 485 in intraday, which can be extended towards 590 and 490 and 495, and the stop loss below 474 can be placed for a trading strategy on intraday basis.
Okay, all right, Himanshu, you have a good weekend. Thanks so much for joining in and giving us those trading calls. By the way, the Nifty is holding more or less flattish, but individual stocks are moving lower. IFCI has suddenly taken a sharp knock. JSPL as well is moving lower as we speak, and MRPL as well. You pull up the intraday chart of all these three stocks, you'll see suddenly there's been some selling on some of these mid-cap stocks. But on that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.